What if I told you a simple tax is now shaping the future of global power, science, and innovation? The United States has raised tariffs on Chinese imports to 145%. Trump says it's about fairness. China says it's about control. The truth is much bigger and much more dangerous. President Donald Trump argues that China isn't playing fair. He says tariffs are the only way to reset the balance. But what exactly are China's unfair trade practices? First, the trade deficit. In 2024, the US had a $295 billion trade deficit with China. Meanwhile, China posted a $295.4 billion surplus, driven largely by exports of electronics, machinery, and solar products. Trump says this imbalance is due to subsidies, currency manipulation, and closed markets. Second, forced technology transfer. Many U.S. companies must share proprietary tech with Chinese partners to operate there. This practice has cost the U.S. economy an estimated $225 to $600 billion per year. Third, subsidies to state-owned enterprises. China supports its steel, chip, and EV industries with massive state funding. That lets Chinese companies flood the global market with underpriced products, crushing competition. So how do tariffs impact U.S. businesses? In the short term, they raise prices. Importers, retailers, and manufacturers must pay more for Chinese goods. Farmers and exporters lose sales due to Chinese retaliation. Real example: Apple warned that iPhones could increase in price by up to 15%. Tesla's China sales fell 40% after retaliatory tariffs. Meanwhile, how is China affected? Exports to the U.S. dropped 22% in the first quarter of 2025. Unemployment is rising in manufacturing hubs. Foreign companies are moving supply chains to India, Vietnam, and Mexico. Beijing says it won't back down. But internal reports reveal concern about falling consumer spending and debt in local governments. What happens next? Data shows three possible futures. Scenario 1. Long-term decoupling. The US and China could split their economies by 2030. Each side strengthens ties with new partners. Costs go up. Innovation slows. Scenario 2. Domestic manufacturing revival. Tariffs may push the U.S. to rebuild its industries. Intel is building a $20 billion chip plant in Arizona. U.S. solar panel production is rising. But rebuilding supply chains takes years, and costs consumers more. Scenario 3. A global recession risk. If tariffs keep escalating, the IMF warns global GDP could drop by 2% by 2026. Markets could crash. Inflation could rise. To Trump, this is a fight for fairness and security. To China, it's a strategy to slow down its rise. But behind the politics, the data shows one thing. Tariffs are no longer just taxes. They're economic weapons. And they're already changing the world. If you didn't know why the tariff went up, now you do. Tell us what you think in the comments. And be sure to subscribe. This is just the beginning.